All right, this is where we left off. Make sure you have all your numbers. Pause me, write them down, and let's move on. First, we need to talk about financial statements before we take it any further. There's really 4 required financial statements. We are only focusing on 3. The 4th one you actually covered you will cover in managerial accounting. It's just the way we split it up. All right, but the 3 major financial statements are going to be the income statement, and you're going to prepare that first. The statement of retained earnings. This is also referred to, you'll hear, statement of stockholders' equity, statement of shareholders' equity, same thing. And the, and the last one is the balance sheet. Now let's look at how these flow together. The income statement. The income statement is where you show that profit that we were talking about. All of your revenues, all of the money you earned, minus all of the expenses to earn that money, gives you net income, hopefully. Not net loss. You don't want that. I mean, it would show a net loss, but in this case, net income. You take that number, that net income number, and that flows down to the statement of retained earnings. Okay, retained earnings is the money you have made in the past that you have held on to, right? Retained, held on to, earnings. So you start off, you had no retained earnings. If it's a brand new business, you probably have 0 retained earnings because you haven't made money in the past. So in this case, this example is it's a brand new business. So you start off with a 0 here. And you say, and we made $1,400 this year. And that $1,400 is coming down from here. But we paid out $1,200 in dividends. So if that $1,400 your business made, you then paid $1,200 out to the owners. So really, the only amount of earnings that you retained is $200 because you paid it out, right? You made money, but you also then turned around and gave it to the owners, which is totally fine. It's your choice how you run your business. And then the last statement is the balance sheet. And the balance sheet balances assets equal liabilities plus equity. Right? So if I list out all of those assets, if I list out all the assets, the liabilities, and the equity, you would see that that equity number is actually coming from here. All right, this is why the financial statements need to be done in this order. You need net income in order to prepare the statement of retained earnings. You need the final retained earnings number to then prepare the balance sheet. So you have no choice but to do them in the order that I've got here. Okay, so I just want to get that out right now. And we do financial statements in Chapter 4. So again, don't be too concerned if you're feeling overwhelmed by this. All right, now let's look back for a second at Video Max's numbers. Okay, so back to the slide that was here. All right, we're going to grab all these numbers that are, I'm pointing at my screen like you guys can see it. Grab all these numbers that are across the bottom here, and we're going to plug them in to the financial statements. All right, because what happens is these are the transactions that we do during the month or during the year, and then we use those to turn around and produce financial statements. So here we go. All right, the rental revenue, $8,000. Expenses, we had wage expense, we had rent expense, we had supplies expense. All right, add all those guys together, we've got total expenses, and you've got rental revenue minus all of the expenses, you're at $2,700 in net income. Feel free to go back and check against the numbers we were just looking at. Retained earnings, as we said, it's a brand new business, so we're starting with 0, plus the money I made this year, month. Sorry, I'm not realizing this is, I keep saying year versus month. $2,700. I mean, you can do financial statements monthly, but at the end of the day, they at least need to be produced yearly to be put out to the public. Okay, so anyway, I digress. Beginning retained earnings, 0, because it's a new business, plus the money I made this month, minus any dividends I paid out, gives me ending retained earnings. Okay, so of the $2,700 that I made, I paid $2,000 out, so I only held on to $700 of that in my business. You would then go on to the balance sheet where we'd list out all of those assets, and we'd list out the liabilities, we only had one, and we'd list out stockholders' equity, the stock, and the retained earnings number that you got from the previous page. That's $20,700. Then you'd add together liabilities and stockholders' equity to get to $21,200. Assets equal liabilities plus stockholders' equity. You balance. Okay. All right. So what I did for this chapter, you may want to pause this, is I gave you little definitions, just user-friendly definitions, probably not as accounting oriented as it should be, in the sense of like they're just regular language. But just so you had this to reflect back to. So pause it. Feel free to take these down in your notes. Revenues and expenses go on your income statement. All of these are balance sheet accounts. Okay, well, these are all of your assets. And over here, you've got your liabilities and, oops, there we go, and your equity items and statement of retained earnings. Okay, so this way you just have it as a reference for yourself as you go through the chapters and you're like, what is notes payable again? All right, so I realize we haven't done a lot of these yet. You will do them in the future, so you may look back to this. Okay, I'm just going to give you the solution for this so you can try it on your own and see if you can get to the same numbers. Okay, so there's the solution for this problem. Don't cheat if you don't want to. All right, and that's it. Have a great day.